everyone. I hope you guys are doing amazing, and I also hope you guys had an amazing weekend. And I hope you guys definitely made the most out of it, and you're ready to kickstart with a new week, the new opportunities. Yeah, and most importantly, do not forget to take advantage of the Caribou bonus from FX Pesa, 100% on your first deposit. So if you do not have your account check ready, check the link in the description to create your FX Pesa account today and take advantage of the Caribou 100% deposit bonus. In the meantime, I'm going to just take about a minute or two so that we are able to get a few more of our peers to join into the session. Then we can kickstart with today's market session and see what opportunities the market will definitely be providing for us this coming week. Once again, I am Boto Emmanuel, the education partner from FX Pesa Academy Uganda. And yeah, feel free to also sign up for our free classes, physical classes for Uganda, 3 p.m. at our offices, Rumi Building, Lumumba Avenue, and Tanzania, FNB House, third floor, that's in Dar es Salaam. And of course, in case you're unable to get to the locations, then you can always be able to sign up for the Zoom classes with the advanced mentorship every morning at 11 a.m., Monday to Thursday, and then the beginner class from 8 to 9 p.m. Monday to Thursday. And if you know somebody who may need these classes as well, feel free to refer them and they don't get to miss out on these great opportunities. So by now, I would like to believe that we've had about 2 minutes for a couple of our peers to join in, so we can get underway and see what the market has to offer, what has to offer us this coming week. Now, as you all know, last week we did have the Fed report coming out, and they did happen to cut rates by 25 basis points in an initiative to try and stimulate economic growth by lowering the cost of borrowing, and definitely seeing if in the long run that can be able to reflect in the labor markets as well. We had seen the job numbers doing badly in the past few 2 months. So one of the initiatives that Fed will always take in order to try and revitalize the labor market is to cut interest rates. So in the meantime, we want to see how that affected the economy. As you all know, a rate cut always tends to affect the currency, but then some pairs will look at some commodities tend to do amazingly well. So of course the dollar you'd expect it to kind of get some negative kickback, but the fact that the Fed didn't go as aggressive as they were as they were requesting him to probably 50 basis points, we're able to see the dollar starting to recover soon after the decision was made. So we're going to look at today's forex calendar and see what is going to where we're going to expect volatilities in the markets today as well. All right, so looking at our forex calendar over here, I'm at Forex Factory as we speak. So I'm going to just toggle this to the high impact news. That's usually the red folder. Usually I keep it with orange as well. Sometimes the orange folders tend to give us some bit of volatility. So today morning when we had the Bank of Australia coming out, and their governor Bullock did have a speech that was at 4 a.m. East African time. So within the rest of the day, we don't have any major news events going to cause some uncertain volatility when it comes into the red folder criteria. So probably we could look down into the orange folders. We do have a speech coming in from the FOMC member Miran, and then Governor Bailey for the Bank of London England will be speaking later on at 9 p.m. All these will be from 7 to 9 p.m. But they are not things that we expect to create a lot of volatility. So one of the headlines today morning, as was setting up our title earlier on, gold was just on its way to create a new all-time high, and it did achieve that about an hour ago. So gold prices climbed up to an all-time high of 3,710 per ounce on Monday, with investors looking ahead to key US inflation data and comments from several reserve officials this week for further policy guidance. Last week, the Fed delivered its first rate cut of the year and signaled further reductions ahead as the labor market weakens. Markets currently imply two most 25 basis point reductions at the Fed's final meeting of the year in October and December, with expectations of continued monetary easing providing a major boost to bullion's 40% surge so far this year. Gold has also been reported by safe haven demand amid ongoing geopolitical tensions and concerns over the economic impact of President Trump tariffs alongside robust central bank buying and sustained ETF inflows. So it's just a key highlight on what is basically pushing price to the gold to the upside. So as we all know that, as I was mentioning earlier, when the Fed cuts rate, people tend to expect it to affect the dollar. So investors will tend to run to things like safe haven currencies, especially because they know that a lower rate does bad for the bond market. So they run to a safe haven like gold. That's why we are seeing gold continuously pushing to the upside. Of course, we shall continuously get questions like, isn't gold overbought or something like that? But there is no such thing as overbought. In realistic terms, investors will always invest money in the safe haven when they feel like there is need to do that. If they feel like they're not so comfortable, if they feel like they're not so comfortable with a particular commodity or in the currency bonds, they are always going to tend to run to the safe haven asset because they are always trying to be on the safe side every single time. So that's one of the things that we are going to be pushing gold to the upside. So I'm going to just try and push over to the charts. Then you can look at some technicals. Since we don't have any major volatility expected within today's market conditions, um, we are going to look at what the market is willing to offer in terms of technical side. So starting off as usual with the dollar index, as we can see, we did have this recovery here, as we can see after the Fed speech, where that pushed to the downside. But of course, one of the things the investors will look at will be that whole idea of what does Powell say after he has cut the rates. Now that either gives them confidence. It's an initiative called forward guidance, and it's an initiative from one of the central banking policies they use to gauge inflation as well. That's why he always gives that whole very long speech on why they took that decision, what they are looking at in terms of market data, where they expect that month to look at. So that's what the investors will be looking at to take that decision. So as much as we did see the dollar recovering, we also know that doesn't boost all the investors' confidence. Some will know by default in the long run the dollar may tank, so they decided to still go and buy the safe haven. Now, in that quite just read earlier, they also mentioned that something a bit of geopolitical tension as well, triggering investors to try and push in on that side. As we all know, Putin has continuously uh, gone ahead with pushing, with attacking Ukraine as well. And on top of US oil being a very affected commodity, even some investors will still run into the safe haven like gold in such scenarios because they expect Trump may wake up one day and just put sanctions on wake up one day and put sanctions on Russia for continuously and deliberately attacking Ukraine. So as you can see, the dollar index right now, it did have a 3-day recovery after that FOMC meeting, push down, push to the upside, and we still reach into a major supply level. So right now, this being a selling zone, even if we are seeing the momentum is trying to push up the upside, you wouldn't want to take an informed decision within this area. So basically, we shall be looking for a proper market structure shift within this area here to try and see if price can be able to give us a good structure to probably look for some selling opportunities. Now, at the moment, you can see price is pushing lower, which would be a good sign because it's pushing towards a market structure shift. So, in 10 get a market structure shift, that basically means we want to see a closure below this rejection wick of this candle here. It's kind of like, I think, like is it a pin bar? Yeah, I think it's a pin bar. So this rejection wick over here, you like say a nice candlestick closure below that, then probably can some kind of retracements into these areas, try and push lower. Other than that, it will be very important to look at also this level here because we can say it was a consolidation zone. So it would be the best possible area to look at for price to get into if you're going to look for some more buying opportunities. So in case price happens to break below these areas, then you can now start pricing in some possibilities of price pushing lower once again because you have a demand level, an extreme demand level all the way to this side that we're able to see down this side. We have a demand level, just mark it out properly. We have this demand level all the way down that price can easily want to target once it closes below this whole supply zone here. So it's the best possible area for you to watch out for and see if price is able to get into this zone and fails to break below it, may probably give us some kind of bullish confirmations to push to the upside. Then you can be able to get a confirmation and ride along with that particular trend. So in case of a candlestick closure below this, you definitely expect price to try and fill up the whole of this imbalance over here. Do I have a two? Okay. there's an imbalance that price is offering us around this zone here. So a closure below that area will mean price will want to target this imbalance area here. We have drawn the ellipse on the dollar index. Remember, we use the dollar index to basically just gauge, okay, to basically come in and gauge what we may want to see on what we call the dollar related pairs. So let me just change up the color on this. Let's go with a green. I think let's go with a green, yeah. So this is the area that price would look to imbalance if it goes below that. So in case price happens to give a bullish confirmation, of course you want to target the most recent areas. That would be something around this zone between this kind of QM level and these areas. This would be your target area. Then of course a break above that area would mean we would learn to be a bullish going all the way, probably to clear out these highs as you can see over here, or this long wick rejection here. Price can easily look to pick up some liquidity right above those zones. So that's something we can look at as far as the dollar index is actually concerned. In the meantime, I would like to send a special shout out to Odiwa, Opar, Hello, Spinoza, Janet, Justus, and Charles. Thanks for tuning in as well. So having seen this outlook or in the dollar index, we're going now try and correlate with a few dollar pairs and see if they're able to give us something that can possibly align. So we're going to start off, of course, with Euro USD. And let's pick it up from the daily time frame. So we had these zones here. Let me just get rid of this. So let's get down into this and first just reanalyze this and see what happened. So we had this extreme demand level we had drawn last Tuesday. So price came and tried to give us a rejection through it. Let me just see if I can zoom it in. So we had this extreme level here. Price came and tried to give us some reaction off of it, but then continuously pushed to the downside. And so the dollar kept recovering after that, based off Powell's remarks after giving us the rate decision, with some bit of dollar recovery. So later on, after price tried to respect that demand level, later then came to the extra levels that were below that. So coming in from the daily time frame, look at the most recent price action. We did see price give us a nice beautiful breakout at this point and left us this inside structure here that is also a nice beautiful demand level as well. So the guys that have been coming in for last week's a few weeks ago, we spoke about these types of demand levels and the hyperability kinds of demand levels, and this was one of the types we saw, and we called it a type 2, a demand level particularly. So price is about to come back into it and give us some kind of, starting to give us some kind of reaction. So today is Monday, it came in on Friday. So what we'll be looking at, if we're going to consider that area holding price, we want to see a shift also in the 1 hour time frame. That would be a shift to the upside. So similar almost to the dollar index, where price is pushing towards some major key levels. We're seeing a similar outlook this side as well. So I'm going to just have my rectangle tool on this area here, where I'm choosing this supply level, because this supply level practically facilitates this breakout here. And the one that we had below here, price came and was able to consume it or to mitigate it. That leaves us with the one above here. So that means in this area, you can look for some kind of selling opportunities, probably intraday opportunities, based off a confirmation. But anything above that, you'd want to look for price to push to the upside. And then you'll have target areas somewhere like here. Of course, target areas, there's areas of interest. That means price can get into them and either give you selling confirmations, or even on the other hand, it won't give them to you. That means you wait for a breakout and to continue the push to that side as well. So the same price trying to reject these zones, but we still have a bit of time. We're just 1 hour and 23 minutes into the London session. So yeah, that's the zone we want to watch out for. Either price gets in there and give us probably lower time frame confirmations or lower time frame shift. You could feel free to use a 15 or 5 minutes to pick up some confirmations within those areas of interest, and then consequently, in case price fails to give you that confirmation, then you can wait for that breakout to the upside and probably a push to continue that move, because you also here similarly have a nice imbalance that price may can easily look to rebalance in case it happens to break above that supply level. So you can see this. Let me just have this ellipse here. Okay, so this here. So here we can as well see we have this imbalance that price can easily want to come and balance up or fill up as well. So the price can come to the extreme levels here if it happens to break above this current supply level. Why I wouldn't mind about this high is because I have no significant supply level above them. There is this, but it's too close, and price happened to have rebalanced it within this rejection wicks. So price, when it breaks above this, can probably want to push up to this side in an initiative to basically just rebalance these whole zones here. So that's something you can actually be able to look at as well. So here, in case in terms of this buy here, inside this daily zone here that we saw, we're able to see the origin of the move and also a type 2 demand level that we spoke about a few weeks ago. So you can see it's also type 2 at demand level among the three high probability kinds of demand levels we spoke about in that session particularly. For those of you that have missed those sessions, you can always go back to the YouTube channel, check in the live playlists. About 2-3 weeks ago, you'll be able to find one of those sessions where I actually broke down these three types of demand levels, how they look like, and what their qualifiers tend to be. So this are the outlook we can have on this side. So of course, it's a buying zone. I'm going to just turn it to blue. Let's use this aqua blue. So this was the buying zone. Then the red will remain for that. Then this being the whole area of liquidity, I'm going to just turn it to black. So that's something you can definitely want to look at when it comes to Euro USD as well. So moving on a bit from that, let's now look at GBP USD. As you all know, GBP USD is one of the pairs that tends to give us good structures in relation to the dollar pairs of late in the past probably 3 or so months as well. So here we saw a similar thing like on Euro USD. Price came into these demand levels, try to respect them. But as I've mentioned earlier, if these levels do not give you a confirmation, then you're always at liberty not to take any trade off of them. And that's the beauty of it. You take because of confirmations, you tend to actually be able to avoid a very bad trades. So here you can see that price came into this high momentum, then only failed to give us a push to the upside. But what it did was break below this zone we had here. This was a demand zone, but price breaks below the demand zone, as you can see, so the demand zone, and then retests it and continues pushing to the downside, which is the whole ethic of it as well. So you'd have looked for probably a 5-minute, 3-minute confirmation after price broke below that zone. So let's look at this analysis as far as GBP USD is concerned in regards to that. So in the meantime, feel free to drop in any questions you feel like you'd like to be tackled, and then I'll look at them towards the end of today's session as well. So all right, coming in onto the daily time frame on GBP USD. Of course, as you can see, we have had this break of structure on the daily that price offered us a few weeks ago. So we're going to mark out on this level here for that break. So anticipation will be a push back into these areas or into these zones, or what we call into the discount zones. If you get your tool, your FIB tool like this, and you're looking for the discount zones, you'd want to see a price coming into the areas after breaking out, of course, price coming into the areas below 50%. So below the 50% of the FIB tool, we are able to see this demand level here, similar to Euro USD, and then price was consequently able to try and respect this area here. And just in the idea of confluences, we have this whole area here that price broke above this trend line, and now it's doing some kind of retest to push the upside, which can give us some kind of leverage in case we are looking for some buying opportunities going further on GBP USD. So moving on to the 1 hour time frame. So you can still track back the origin of this move, and it's going to be a type 1 demand level. Of course, one of the ones we spoke about as well in the session on the 1H. You can always trace back that move to these areas over here that price offer does, and then it's now pushing to the upside. So looking at what you can anticipate in today's price action, get rid of this trend line up above here. So see price comes in, forms a low, and then comes and takes out a few more highs. So this just shows you how strong the buyers are coming into the market. So what we'd like to see would be probably a nice good closure above that area, then a push back into this zone. So when you realize below here there is some kind of structure around here, I'm going to look at this structure probably on a 15-minute time frame. a good candlestick closure above that, you can expect price to rebalance into these zones. So I'm going to just mark this area out from here. So anything around here, a price will tend to, you can now look for confirmation. So you can have your area of interest marked out this way like this, right? So with the areas of interest, the beauty with them is that when price gets to it and fails to offer you any kind of confirmation, you're free to let it be. But if price gets into it and then it gives you a confirmation, then feel free to take up that trade because you have built up a bit more confluence, probably structure, and then some formation pattern you feel you're more comfortable with, you're able to take a trade based on those particular criteria. So you can have those whole zones, that whole zone there as a focus or area of interest that you're going to look at as well. So for price push back into this, so I said you're going to look for the area in between here, like on the 15-minute time frame. So let's go there. So when I come to the 15-minute time frame, of course, you're able to see a nice, beautiful area right about this zone, a nice demand level. So we can also investigate and see if it's below the 50%. So it's going to be a tricky one because it doesn't look like it's below the 50%. So you may want to have a very strong confirmation. Okay, it's at the 50% level literally, which still qualifies to be a discount as zone. So you can always still be able to take it up. So usually with the Fib retracement, I love using it this way here because another thing I tend to do if price gets to the 50% zone that I have first, like now this demand level here, and fails to offer a confirmation, I'm usually going to look for another area of interest between my 72 level and my 69 level, which happens to be within this area. Yes, I can always be able to refine to a lower time frame and look for a second demand level within those particular zones here, within this, the 7 to and the 6-9 of the Fibonacci level. So those are areas I'd be watching out for as far as GBP USD is concerned. Probably retracement down to those areas there, followed by a nice push to the upside. So that would be something lovely to see as well. So of course, if you just add some more confluence, we had used that trend line earlier, then here you can still be able to have that trend line come in again. First touch, second touch, third touch, fourth touch, breakout. We haven't had the retest yet, and sometimes price can also tend to retest to these former resistance stand to support as well. Sometimes price can tend to look for that particular zone or that particular area as well. So that's something you may want to look out for in regards to GBP USD. So one more thing I would like to remind you guys that we do have our How to Trade Like a Pro webinar coming up on the 30th of this very month, and the link is of course in the description. Feel free to sign up for it. It will be from 8 p.m. to 9 p.m. We're trying to cater for all the people that are definitely be at office around this time. So feel free to sign up for that webinar there with a link in the description. There's also a QR code I will share towards the end of the session where you're able to put what questions you want us to tackle on that particular webinar. Now, the beauty of this is that you will have a variety of, of tutors from myself to Rufus to Prudence and to Robert as well, all in one session. So please feel free to be there. You know, someone who may not have time to be on our 11 a.m. sessions, please, you can be able to share with them that link as well, get them to sign up and let them not miss out on that great day as well during that webinar. So this is GBP USD, and this is the outlook I'm basically looking at in terms of how the market's moving. So on the other hand, I'm going to look at, let's move a bit away from GBP USD and look at something like Euro. Let's see Euro, I'm sorry, within the Euro. I want to keep still like one more pair within the USD fraternities. Let's look at USD JPY and see how the market did fare out on this. So we did see a push to this area here. Then, of course, some push to the upside with a gap up around here. And then market has been moving within that definite range. So let's look at what we can expect in the market this week as far as USD JPY is concerned. So let's look at the daily time frame first. So we can realize that this pair is kind of in a consolidation after this push to the downside. So it's not really a very great outlook. I don't think it's something I really want to pay attention to. What I'm going to do is I'm going to mark out major key levels that I want price either to get to offer me some good buying opportunities. For the time being, we can start to have a strong resistance that price has formed at this rejection week here. We had it weak through it a little bit and then failed to push to the upside. So coming onto this side, there would be some what would look like a break of structure. It's not the best break of structure. I don't like the ones where it's just the wick closing above these wicks. I would like a wick to candle. Basically, what I mean is that price closes above with a candlestick, but that doesn't mean you can't look for opportunities besides that. So let's look down at the 4-hour time frame and see what demand levels do we have on lower time frames where we can be able to look for some kind of confirmation pattern. So I'm going to have a conditional bias and also a confirmation based, and then a bias that's just based on structure, right? Structural bias and a conditional bias. So when I look at structural bias, price has been forming higher highs and higher lows in the most recent price leg around this area, leaving me with this demand level here. That's a type 2, and then a type 1, a demand level that was definitely a news candle, as I can see over here. So this is a very big news candle, a very big zone or area, could say. So in terms of looking for price to come down and then push into the upside, these are the areas I would want to watch out for to look for confirmations. In case price to get to them, then I can look for those bullish confirmations within these two zones here. Now the condition-based bias, I want to look at what the most recent selling area is, which would be this. So I would prefer price to come into this area, either give me a confirmation for sales, wouldn't be the best option, but the beauty would be if price breaks above it, gives you a nice retracement and then pushes to the upside above this level over there. That's a level I would really want to watch out for in terms of that, the condition based bias. Either price goes above that, breaks and continues to the upside, or it's going to come down to either of these two demand zones and probably give us some kind of bullish confirmation where we can look to try and capitalize on the market as well. So this as far as USD JPY is concerned. That's what we would want to look at probably the market giving us in that particular regard, right? Right, so sorry about that. So moving a bit away from our USD JPY, let's now move into a bit. Okay, let's see something from our USD card. I wanted to look at USD card as well. Just get up on the template. So it's the US dollar and the Canadian dollar as well. The Canadian dollar has been getting some bit of recovery of late. As you can see, this push to the upside on a daily time frame. We have been seeing, some kind of recovery from the Canadian dollar, as you can see from here. After this big rally to the upside, price forming higher highs, higher lows, began attempting to form lower lows and lower highs. And that would have been the case, but let's see what the lower time frames are telling us. So let's see this. Let's insert this. So the bias here looks to be like a steady bullish structure. So we're going to first mark out obstacle areas, and then we look at what other possible areas you can want to take some opportunities. So looking at price, the price came to the supply level here, and then tried to give us a rejection. Didn't quite tap into it, which means the supply level is still valid. So you can easily see price continuously push into that upside. Now, if we tend to see today probably closing bullish on this pair, then price would have attempted a low time frame, some low time frame at demand levels that we would love to find in between these areas where I've drawn the box. When I go to a 4-hour time frame, I'm focusing on seeing if there are nice areas within that where price could possibly retrace to and push to the upside. So when I look at this carefully, I don't really have any significant areas because price hasn't given me a breakout to the upside. But what I do have is this supply level. What I do have is this supply level here. So I'm going to get rid of the one above here. And you're going to see why in a minute. You're going to just see why I would prefer to do that. So I'm looking at my extreme at supply level this side. That would have been my target. And it's all the way up here. It's a type 1 supply level here, as you can see. Then I'm looking at the current supply level that price is offering me. Why I would focus on this is because on the 4-hour time frame, I have this breakout to the downside. Now, when you say breakout to the downside, you can easily anticipate some kind of selling reactions from the supply level or the order block that's responsible for the breakout because it's a type, it has an imbalance, it has a breakout, which is a very good sign for me to look for confirmations when price gets to this zone here. So I can also refine that zone as well to a 30-minute time frame and see what I'm able to come up with. So when I come to the 30-minute time frame, I do have this zone okay, the supply level that failed to hold price because of high momentum breakout. But then I would like to see if I can get some bearish confirmations within this particular zone there. In case I fail to get some bearish confirmations, then it's always easier for me to wait for the extreme supply level and see if I can get in a 5 minute confirmation. So yeah, I won't be looking for buys yet. You'll be looking for selling opportunities within that two zones, because you will definitely be looking for like a 5 minute kind of confirmation pattern or confirmation candlesticks for those that choose them, or even it could be an indicator as well for guys that now choose indicators for confirmation. I always have a preference of using indicators for confirmation strictly. I usually fancy the idea of using indicators strictly for confirmation. So that's something you want to watch out for. Of course, on a low time frame, like a 5 minute time frame, you can wait to see some bit of confirmation. We have some coming in right now around this area with the supply level available here. So that would be one take. The other take would be our price to get back into this zone. You can still be able to refine the zone above. The beauty with refinement is that you're always reducing the amount of risk you're going to have, even with a confirmation coming in. The risk you'll be having, because the zone has already been refined, that means even the confirmation will be kind of like a refined confirmation, I would say, something of that sort. Those are the two zones would want to watch out for when it comes to USD CAD. So this breakout zone, or you'd say support breaks and becomes resistance, supply breaks and becomes like a demand flip level. So that's rather, sorry, supply flip level and demand fails to hold price. Those are other similar ways you can always be able to talk about these areas here. This is a 30-minute time frame as well. So you can see this correction move, of course, that price is trying to give in. Though it gives us a small pause, then gives us a big impulse to the upside. Here it has given us the pause already. So in case price breaks above this area, then you can expect that impulse to this extreme supply level we are seeing up above there, and see if you can be able to hold price. So of course, a candlestick closure above that high would definitely mean you're looking for now buying opportunities to see if USD CAD can continue that up kind of bullish trend it has been doing for quite a minute. And now, all right, so this is USD CAD. Now let's move in a bit to gold and definitely silver and see what the market has to offer us. Okay. So now with gold, this was our analysis from last week. I think for the guys that attended the TikTok session on Friday, we did supplement on this a little bit, and we spoke about how we had a trend line that was being formed somewhere within these zones here, and then expect that to break out, then a time frame retracement and a push to the upside. That price was able to offer us on a 15-minute time frame. So you could have had this all even from up here. You could still cater for all your touches you wanted from there. Then looking at the 15-minute time frame, we had that nice breakout and a nice push back into these zones here. To go to that, this was a 5-minute zone that price used to continue the push to the upside. So because gold has been in a dominant trend to the one direction, that's all the way upside. I'm not going to be focusing a lot on the daily and 4 hour time frame. You can do the 4 hour to look for some major key levels of interest. But as you can see, the 4 hour that has given us a nice breakout over here. So what we'd focus on is seeing a push to the downside and probably a 30 or a 15-minute shift to the upside. When I look at what major areas of interest you can look at, in case price happens to give us that push down, so price always has two options. You can either continue to the upside, create new areas that it will use, or it can move to the upside and give us that deep retracement to the downside as well, back into this old zone. Now this is a very nice zone. As you can see, that price had a bit of consolidation, a breakout, a retest, and a break to the upside. So of course, this demand level would be a nice key level to want to look at. But as you can see, price is currently kind of forming a new level, and would confirm only that level only if price closes above that particular zone, that particular high created there, which is this. As you can see, we are hovering around our new all-time highs. That's about 3720.5 something, and price is looking to close above that area. So still, you want to focus more on trading with a predominant trend, not just some people just anticipate now price has overbought, it's going to sell. As I told you, I don't quite believe in the whole ideology of overbought and oversold. I don't feel like it's logical. Particularly, yeah, there are indicators that will tell you that this area Might be overbought, might be oversold, but I don't really feel like the investors or the markets work that way there. So especially with gold, because gold is a safe haven, and over all through history, it just happens to appreciate in price value. So that's what you're seeing right now. It just continues appreciating to price value as well. Sometimes it has a crash, but that I think I've only seen a crash in 2020, 2021, 2022. So when we had the crash that pushed gold down to almost 1500s per ounce. So right now it's what you're looking at when it comes to gold. New zone has been created here. When this candle closes above that area in about 15 minutes, then there will be a new zone where you still anticipate a retracement to push into those areas and probably continue with that dominance of the bullish markets. Coming on to lower time frames, if I was to refine my demand levels, in case price happens to close above that high, this would be my best pick for a valid demand level because it's a type 1 as well. It would be my best pick to want to look for that push continuously to the upside in regards to this as well. So this is something we would really want to, of course, wake up and look at or anticipating this price action. So as I said, this is just the best area. Doesn't mean it's a must for price to actually come to that area. When you look clearly on this 5 minute, for the guys now who like scalping, you can realize that there is this zone here that price had difficulty breaking above. If you're able to see this zone here, if that price had difficulty breaking above before it eventually gives us that impulsive break that pushed us to another all-time high and still pushing us. So this can also be a nice zone where you'd want to look at for price to come back in turn. You can look for that 1 minute confirmation just to supplement on your trade idea and probably give you that kind of confidence you're definitely looking for to try and ride the wave of the yellow metal and in these regards. So yeah, that's as far as gold is concerned. Another pair that we know has been very elemental when it comes to metals has definitely been silver. Just a second, I tried to get out my where is silver over here. I had silver. Oh, here it is. All right, so silver has been one of those major key factors for people to look at. As you all know, silver is one of the biggest commodities when it comes to the steel and tube industries and manufacturing, of course. So we did see this flip level, price came into it, pushed in, then pushed up a bit, came second time, pushed up a bit. Then we had this rejection week here. When price broke below it, it of course gave us that nice retest, a push a bit down to this extreme demand levels here, or to this demand zone, as you can see here a push to this demand zone from where we have seen that initiate this buy up we are in right now, also at new all-time highs in regards to silver. So let's first do this. So look at what silver, then it's a 4 hour time frame. We have that nice beautiful breakout. We have very beautiful demand zone right below that. It's a bit far, but of course if price has given us those candles, these are previous 4-5 candles with that kind of aggression, which means price can as well in the long term still push back for a nice beautiful retracement before it continues to the upside. So once again, I'm going to have my two areas of interest that I would like price to come back to before I actually think of looking for confirmations to buy up on silver. So these are the two zones that I can definitely see that a price can as well come back into them, give us a nice, a beautiful confirmation. Of course, lower time frame confirmation, preferably a 15 5-minute confirmation. Then we can see price can give us some opportunities to ride the wave on silver itself. So that's as far as silver is concerned. Also creating new all-time highs, very crucial element when it comes to Trump's economy and is speaking about bringing major manufacturing back to the United States. And we all know that steel manufacturing is one of those key industries. So yeah, the demand for silver is high, and of course, the investors are watching. So and they're watching and they're investing. Of course, where the money is, that's silver in simple terms. All right. So now let's move a bit away from the metals. We look a bit at some indexes and see what is transpiring that side. So we can start with the Dow. So looking at Dow Jones, so for the guys unfamiliar with it, you may be scared by the chart, but that's just the way it is. So the line chart will still be a nice, beautiful, clean chart as well. So looking at the Dow Jones, we can see it's trying to instigate some kind of push to the downside, but as we have seen in the previous price action, there has been a strong kind of like area holding price, some strong support levels. But what we'd like to see is probably a close below this area here, and then a push all the way to these zones below. We have this demand level at the extreme zones. That would be a nice beautiful push to that area there. But of course, it's a daily time frame, so let's look at the 4H and try to break down this a little bit. So when you look at the most recent price action, price did give us this breakout on silver from this area here. So it took out two highs, closed above one, then gave us these wicks above the second. Okay, yeah, give us those wicks above the second high before it gave us this deep retracement back into that strong support level there. So in case support level is able to give us a confirmation to look for to push to the upside, we can definitely look for those buying opportunities. So you're going to look for what area you'd want to watch to see a nice, beautiful shift pattern. So when you look at this carefully, let me just get rid of this. So when I look at this carefully, I'm going to realize that I have this area here. That's a supply level. So this area responsible for the lowest point formed on this pair, that's Dow Jones. So a break above this area would mean you're looking for buying opportunities. But of course, if price happens to fail to break above that, then you're going to want to come and take out these strong resistance levels here and probably look for that push to the downside on the Dow Jones. So then looking at a bit at German 40. So it's a 1 hour time frame. Let me just stay 4 hours well and see if I have a similar zone. So it's a very impulsive move to the downside. Never the best to catch a trade on, but we have a nice, strong, beautiful zone here before we go to the extreme zones. So when I mark out that zone and come to the 1 hour time frame, of course, I would definitely want to look to refine this to the demand level that was available here. And this was the demand level, and cancel rejection came straight off that demand level there. Now, any push lower than that would basically mean we're going to watch this kind of rejection areas, this very long rejection week. So a push below that will see us come into that long rejection week to look for our 15 or 5 minutes at confirmations to actually push price to the upside in terms of German 40, but this is a very nice, beautiful zone. And price did give us a whole round retest from upwards before it gave us an push to the downside. So you can still expect a push a bit from one of those two zones to this supply level here, from which you can now look for confirmations and see if we are going to stick with buys or then are going to some selling opportunities. So that's what you're going to be focusing on, or what you're going to be looking at in regards to the structure on German 40. So moving away from that a bit, we can definitely now look at Nasdaq. That's Nas 100. So earlier in the beginning of the session, I did mention about how when the Fed goes ahead to cut rates, of course the dollar is expected to weaken a little bit, but then the investors will now set their eyes, apart from gold and the dollar bonds, they'll set their eyes on somewhere that is a bit more feasible, where they'll get more returns. And when the rates are lower, US 100, US 30, these are some of the pairs that actually benefit the most. Why? Because now because there's going to be cheap labor, there's going to be more business stimulated, it's going to be access to loans. That means some investors want to buy into the bonds of these some companies, the stocks of some companies want to buy in early enough at the best possible price now before there is a high demand for these commodities as well. So when you look carefully, where that clean demand level was left all the way down this side, and another one below it as well. So as I was saying, for them they will want to buy into these stocks a bit earlier on. As other people are waiting for the data to start reflecting, for them they're entrepreneurs. One of the things they do is take risks in some of these companies. So by default, that's one of the things they tend to do. So I'm going to just refine these a little bit to see what best other possible areas we can get some buys. So as you can see, price came in and gave us this structure before it broke out on a 4 hour time frame So you're going to refine that zone as well to the 1 hour. So when I come into this zone, there is what they call double wick formations that always have hidden areas inside them, all the time frame areas. So you can see that area right over there that price has offered us. Then down this side, this is not one of the demand levels we speak about. Is it? Yeah, yes, it is. It's a type theory demand level that we speak about. It's a very huge level as well. But usually don't get worried of having very huge areas of interest, because you're definitely going to either refine them or even wait for confirmations that will give you some easier ways of approaching the bigger zone or even reducing the risk that may be involved. So when I come into this zone on lower time frames, the big zone, I'm going to find that this is the demand level I have in between. And the one first area I'd want to look for, so get some confirmations. Then beyond that, I'll have this whole area here. I'll have this area here as an area to watch as well. To still give me a long, big stop loss. But then the beauty of it is that I'm not going to take it like that. I want to wait for some kind of confirmation, preferably on a 5 minute or a 3 minute time frame when price gets to either of those zones. Then you have this zone that's currently holding price, so you can just go to lower time frames, so a 5 minute time frame, and see what it's pushing for. So for us to get a confirmation on this pair here, we would like to see a nice, beautiful closure above this 5 minute high, because this 5 minute high is responsible for the lowest point formed. So a shift above this area would mean price is now looking to go back to the upside when it comes to US 100. So basically that's the index outlook I'm looking at on of course Dow Jones German 40 and the Nasdaq or US Tech, some call it US 100. So that's what I'll be looking at right now. So other than that, I think I'll be going to one or two questions, as you can try to see uh, how your week moves on from that. I would still like to remind everyone, you've just tuned in, don't forget to take advantage of the FX Pesa Karibu bonus. It's a 100% deposit bonus on your first deposit, and you can be able to use that to increase your margin and of course try to capitalize on some opportunities as well. So just a second, I get the questions in. Yeah, so as I was saying, you can take advantage when you find your new account. You get a 100% deposit bonus with a Karibu bonus from FX Pesa. So if you don't have your account yet, link is in bio, or not bio. Here it's a description, right? The link is in the description. Create your account today and be able to take advantage of that. So I am K Chat says, hey morning Emmanuel, how does the new policy of the Trump gold card affect the economy? And that's a very beautiful question. So there's no exact figures on how they call them expatriates or professionals are working in the US under what they call H1, is it H1B visa. That basically means you've been imported by a company to work under a professional job, right? They flew you into the US to work for them. Now, apparently, the estimate is above 400,000 jobs in the USA are taken by foreign expatriates using that kind of visa. So, with this policy, if these companies really need those 400,000 people and they're going to pay $100,000 for each of them, you can do the math from there. It's a very big pool for revenue in case those companies take the initiative and be like, K-Chats, we need you in the US, JP Morgan needs you. We are going to pay the visa of $100,000 for you to come and work for us. That means they're going to pay the government $100,000 for every person they need to fly to the US to work for them. On the other hand, if companies realize that the visas are so expensive and it's a liability, that means they're now going to look into the United States and create more jobs, because they're going to fire these guys. They're going to send them back to their countries because their visas are going to be very expensive, right? Which means that when this purchase back, there will be more job opportunities created for the people in the American economy. So it's basically trying to tackle the whole ideology of unemployment. And there's an idea that many of these people here, the companies go for them because they are cheap labor, right? Someone's going to be like, let's say a level one, a programmer is going to go and from Africa is going to go and work for like, let's say $60,000 a year. Yet the actual wage there for an American would be like 100,000 US dollars. So they come to Africa whatsoever and get someone who's going to work for them cheaper. Then they will pay some small money for the visa, because they'll be saving, right? If the visa has been costing like $30,000, and instead of paying you 100K, they're going to pay you $60,000. That means on the first month they are saving $10,000, and then they're going to start saving $40,000 every single month. So that's how it's going to affect the global trade. Not the global trade, the American economy. It's going to either affect them one or two ways. Positively, they are both positive in simple terms. So basically, I hope that answers your question at I am Kchats. So other than that, I'll still telling you about what we have going on. We also do have a webinar at the end of this month, how to trade like a pro. So it's an intermediate, it's a whole webinar. So it's going to be a crash course, and you're going to be focusing on answering some of your questions. So if you haven't signed up for the webinar and you'd love to be a part of it, I mean, I would love for everyone to be a part of the webinar as well. I'm going to just share a QR code where you can drop your question that you want to be answered. Of course, you're going to want to register for that. You're going to want to register for the webinar, and to register for the webinar, the link for it is also in the description. So you can go ahead and register for that webinar, and then we would like to have you guys. Okay, so where is this? Then would like to answer your questions personally. So if you have any question that you'd like to be tackled on that day there, this is the QR code you're going to want to scan in on that particular day. Scan it in, you'll be given a question where you can put in your questions, and don't forget to sign up. You'll be given a reminder. It's on the 30th of September, 8 p.m. to 9 p.m. and to be an online webinar. So please don't want to miss out on it. Everyone will be there. Rufus, myself, everybody else will be there as well. So please don't miss out on that. So other than that, I think it's been a pleasure having you guys. Thanks for attending this session. For career Euro USD, you're going to have to watch the replay of this because we did analyze that. I think it was the second pair we analyzed at the beginning of the session. So other than that, I would like to wish you guys a peaceful day and a blessed week ahead. All the best and happy profits. So until next time, you'll have a nice time.